Hey, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 15th, 2023. So, I want to start with I want to build towards the sniper trade of the day in SPY to show you the fractal nature of our patterns and how we can gain insight. So, the first thing I want to look at is this is the market 150. Whoops, that was magic. So here's our 30-day look back, our 10-day, our 5-day, and then the 1-day. And so we notice that this thing is rolling over. After 3 really strong legs up, it's now starting to test with new 10-day lows. And so we can recognize that this support level is going to be important. We know the 30-day low is going to be important. The 10-day low is going to be important. So there's opportunities for big breakdowns. We know tomorrow that if it breaks out of this zone, there's the opportunity to retest. So tactically speaking, we have a very nice setup for tomorrow. So let's look at what happened today. Now, in the market daily, what I want to show is that we now have our 30-day low. Yesterday's move was a nice turning point. So we saw how it went from fall to winter, and that was crucial. And it really closed nicely yesterday. So we had reason to believe that that could be the move. Today, however, there was a gap down and then a harsh sell-off to a new 10-day low, which broke through the belly of the RL10 and deposited us with a new 10-day low. So now we're closer than ever to a test of the 30-day low. Now, this is all happening during a time when the MACD, Red River, you can see that we left the Red River way back here. So this is all part of this harsh fall and winter that's developing. So this was a large daily move, and it started with a gap down and then a harsh directional sell-off that closed poorly. So that means that this was an opportunity to get an intraday trade at a moment when the market was in a state of weakness. So now if I drill down to the 30-minute, and I see this is now this blue box is my 5-day look back. I can see my 5-day high. Oh, it made a new 5-day low today. So that is now my 5-day channel. And it turns out that the 5-day low is also the 10-day low. This yellow box is today's 1-day move. And in that, I can notice some things like a turning point in the RL10, another turning point, and another turning point. So there was strong indication of lower highs. And then I also noticed the importance of this RL10 and this belly of the dragon. Both of these price locations are significant because if they break, then we have an opportunity for a continuation of whatever the downward pressure is for the intraday trade. So as I'm developing my trade architecture, I can notice these things. And I can notice things like yesterday's close at the top of the day was really nice. But then I noticed that it opened here, so that really represents the gap. So all of that joyful goodness, most of that gets erased inside this gap down. Let me zoom in just a moment. So now I notice that I have the gap from here to here. And in that time, that was enough to turn the dragon to roll over, the RL30 to roll over. That makes us in owl territory to the downside. And we have this lower high. Now that makes this a really important price target. And then as a signal of support and resistance. So when I see this downward move, I am justified in instantly getting short because I am violating the PSAR. And if I can put this standard risk box from and use that as the PSAR flip, there's my operational risk, and that gives me 1 or 2R just down to a test of the previous belly of the RL10. And then if that fails to hold, like it failed to hold, then I can think of, there's my 4R, and there's my 2R. So that makes this short entry right here, and this risk box as a really strong intraday move. Now notice this is simply on 30-minute charts. I could trade that just on 30-minute charts. And if I were to do so, or if I came back to check on how things were going, I can notice that from the PSAR flip, there's this really nice orderly, it's almost like a lid on this pressure cooker of the PSAR tracking down, the dragon tracking down. And then I can notice that when this short position does reverse, it doesn't even get through the dragon. It hardly made the RL10 flinch. And then it comes down for another test, and it only got that far this time. And now it just sneaks through the dragon. The RL10 actually reversed. So if I'm short from here, this is where we should be thinking about taking the dragon exit, because it's after the RL10 reverses. And so if my short is from here with this much of a risk box and my exit is here, I'm getting about a 2R move just on the 30-minute candle or the bar, and without trying to really get more. I notice that when this breaks, this is the new belly of the RL10, used to be here, now it's here. When this rolls over, I have to pound that thing short right away, because now what we have is this series of lower highs and a failure right after a trivial bounce. So this is really a high priority, and I still have almost an hour in the trade. There's another 2R in there, and that's just using the 30-minute. So now if I go down to the intraday sniper trade of the day, now what I'm doing is looking at the S&P now on the 3-minute chart. So here was the close, here was the gap down. Now I could get short right away, and your trade is even better if you do that. But if you waited for a standard risk box of about 0.70, 70 cents, or you wait for the OR3 entry, which is what that is, you end up getting instantly 1R, second failure. This is where you might take a dragon exit. or you might add to it. But if you added to it, you would certainly get out by the time it hits this, because now you have one leg down, two legs down, a bit of an effort, and then it fails back through the dragon. And so you should be out somewhere in this region on a standard entry here. And that's just taking advantage of that move. Now notice how powerful and useful our little tuned PSAR is. Look how nicely that identifies where your directional bias may be. Now, if you elected for this, your standard risk would be here, which is pretty close to this. And then you have the opportunity of this PSAR to get you leg 1, leg 2, and then it cannot make a new high. So you had best be out of this thing right here, because that's where it failed to follow through. And in fact, the downward move is indicated, so you should be short here. Or if you waited for this little short here, one of those two positions should be short with your stop right about here, and then you never get out of that the rest of the day. And in fact, you might have added a position here, or if you took this or this, you scratch that trade. And now what I want to show is how we can look at the Red River to help us understand what's going on inside this trade. Oh, that's a little too big. Still too big. That's pretty good right there. All right, so I want you to notice just how tightly compressed this Red River is in here. So there's nothing going on in here. There's not a lot of wiggle room inside there. This is all contented sideways movement after the surprising run-up, which was out of the Red River, and then it just stays locked in the Red River. But we know from the size of the gap that this was tradable immediately because it broke down into the winter, which is below that zero line. Plus we knew from the size of the gap it broke through those support levels. And if we just take the OR3 entry, we're short from here. And then it would be difficult to lose money on this trade. It can be done. This is a dragon exit. You might then have re-entered short, and then at this point you're out of this trade, and you could reasonably consider the long side. Well, why is that? Let's see what happened down here in the MACD. You have the exceptional harsh winter move. Notice that right here, the winter failed to fail further and actually became spring, and somewhere around in here, it had re-entered the Red River. So that's a natural testing point. And now you could say right here is where the PSAR flip occurred. Notice this PSAR flip occurs after the winter is over and it's into the buffer of the Red River. So there is a tactical springtime opportunity up to here, where it's now back to the zero line. And now, if this is going to go, it should go, because this is now the summer. Well, did it? No, it didn't, because it rolled over, got back to the zero line, and then went back into the winter. So if this were to go, this thing should go large and hard all the way back to the high of the day, and then all the way up to close the gap. So that's a considerable move. But it didn't do that. It rolled over at a place where you had a test. Notice how it can't make new highs, and it is actually starting to roll over, and your PSAR flip happens here. So there's a natural collapsing dragon with a standard risk box, and now you have a series of lower highs for the rest of the day. And if this was enough to get you out of this trade, this has to get you back in. And if this was enough to get you out of that trade, this is enough to get you back into the trade. Because notice that in the after lunch period, this is all chop. There's no harsh winters in there anymore. So you should not be trading inside this. But what you have in that last hour is a breakdown of those three support, which almost is this one, if I'm being honest. That 444 is a really crucial price level. And if you got in here or waited to get in here, in that 30 minutes with a standard risk, there was 2R available in the last hour, and now with no overnight risk. So one of the things that you should get in the habit of is learning how to map your trades back towards what's actually going on with the MACD in order to have a simpler understanding of the seasonality of these different price moves. And then I want you to notice just how important those turning points in the RL10 really become. Those demark very important support and resistance levels. By this time, look, you're into a sideways quiet channel. Now, maybe your rule set says don't trade the last hour. I wouldn't argue with that. But the point is that we should be very well prepared to trade that early opening move on either the 3-minute chart, as I showed you here, or on the 30-minute chart, which I talked about here. And now, as I construct this, I can now think about tomorrow's move and realize that there's some important price levels. Here's that new 10-day low. So if that price opens here and fails through that 10-day low, son, I just entered the winter, and that would be a continuation of this painful move. And now if I go from the 30-minute back up to the daily, I can now realize that what I have here is a really crucial, critical state. And if that fails, I'm entitled to, I cannot be surprised if it gets down all the way to 438. And that's a $5 move. And if I can manage 70 cents, that's a 7-to-1 reward to risk ratio just back to the 30-day low. And then guess what? If the 30-day low fails, the next support level is down at 434, which is another $5 move, and that makes this about a 12-to-1. So this downward collapsing location is really pretty important, particularly when I go over to the daily report and I take a look at the risk Z, and I notice that, oh my goodness, I'm at -1 Z-score on the S&P. And so this rollover from the 30-day high to the 30-day low was accompanied by a significant increase in volatility, and we are right at the boundary of volatility becoming massive to the downside. So let me say that again. We have not seen fearful volatility yet, but if it breaks below the 10-day low and the 30-day low, We are into the world of abnormal volatility, and we're either going to become in bullish volatile. It's a long way from sideways volatile. How far? 7%. We're actually 5% above. So that would take a $20 move to get us to sideways volatile. So there's a real good chance, though, that if we saw some collapse tomorrow, that we could see a $10 move. Well, when you're in a position at a critical state like this, it's not surprising when the rest of the world and the big fat indexes are all signaling buy on dip opportunities. Well, why is that? We had 3 strong legs up and now a significant collapse to here. So that's the most obvious buy on dip opportunity in the world. And if you take standard daily swing trade frames, you would notice that you have signals to the upside. So there's a good chance of seeing upward buying pressure tomorrow. That would make these, in retrospect, be great swing trades that take you back to the 10-day high and the 30-day high. The point would be is that because you're in a critical state for that nice move up, you're also in a critical state for a massive move to the downside if that swing trade fails. So the central idea in compound critical state trading is that you have a small zone of uncertainty inside here. Let's go. Let me call that the yellow zone. Your little risk box. And now you have no directional, oops, make that black. Sorry. Now you have no directional bias. And you're ready to trade with a minimum manageable risk box. On the long side, up, which would take us back to the 10-day high. And this is telling you that a lot of markets are in that condition. Or if that fails, or if it just fails right away, which is even better. Like, you would rather not try this one on the long side and then have it fail just to get on the short side. You'd rather that thing just failed on the short side to begin with. And I've just shown you on the charts, tactically, that there is a $10 to $20 move to the downside that's reasonably available in the next 1 to 5 days. And now as we look at the indicators here, this now we integrate that by saying, look, I'm in bullish normal, so I'm not afraid of those signals. I know that I actually have to have sell-offs on 10-day and 2 days in order to create the conditions for a buy-on-dip opportunity. Most of the time in bull markets, this is the signal for reasonable dips that long side traders could use. So I'm not going to be surprised if there's buying strength. So if here's my little yellow zone in here, what that means is the buy-on-dip opportunities is going to start bringing in buying pressure from guys who are going to look at the tactical opportunity to have that go back to the 10-day high. But I also know that because of this volatility and how fragile this market is, that the sell-off that brought us down to this compound critical state is going to attract more sharks who sense an opportunity to get short on a continuation of the downside. So now what we have is even more intense competition between the sharks that made money on the downside, plus the new sharks that are attracted by the smell of blood, plus all of the buyers that are already in the trade that want to buy on dips, plus new tactical traders that want to start positions after a dip. So all this means is that there is twice as much intensity in this compound critical state. that's the point that I want to make about how to understand what these different instruments on the dashboard are telling you. I can now go further and say, if I want to emphasize the downside, I might reasonably come over here and say, who are the things that are failing the most? I'll just consult those things that made new lows, the score between 100 and 0. Now, if it broke down below the previous low, this is where you get into those negative numbers, less than 0. And that's the ones that highlight as red flashlights. So if I wanted to be really prepared to trade on the short side tomorrow, I might want to just go look at these. Look how weak Travelers is. It's a 2.9 to 1 upside trade. So if this was my 1 unit of risk in Travelers, and where does that come from? It comes from a mechanical entry 5 cents above today's high with a 1-hour stop 5 cents below today's low, which means that today's bar looked like this. So that's where that 1-hour comes from. And then there's 2.9 of those. 1, 2, 2.9. Just back to the 10-day high. So that's a 2.9 to 1 reward to risk ratio in Travelers. And that's on the upside. But if this thing fails, you don't have to persuade people this is horrible. If this thing fails, it could really collapse in a large way. I could also look at Tesla, the most important and watched symbol in the world, and notice that it has made, new 10-day and 1-month NDX lows. I'm intrigued by the fact that it was also a big percent loser today. It was down 3.5%. That's why that symbol is highlighted red. I might be interested in Chevron and Exxon. Chevron and ExxonMobil? That tells me that the energy sector is probably weak as well. So I'm going to think about that going forward. Well, what was strong? Walmart, Nvidia. Oh, that's good. IBM. Okay. So now I can consider how many things are on these favorable reward to risk ratios. Maybe I'm interested in the triple screen and 551W. Maybe I'm interested in Devon Energy. Oh, Devon Energy. That's connected to the XLE. Devon Energy was down 2% today, which is bad, but not quite as bad as Chevron and not quite as bad as ExxonMobil. But I do like some Devon Energy, DVN, sorry about that. So that's one of my chain trades. If the S&P is down big tomorrow, but if energy is worse than the S&P, I could then look and see which of those three symbols that were bad, ExxonMobil, Chevron, or Devon Energy. Which one of those is the worst? And then I might quickly find my way into a trade that is going to be the big winner on the downside. On the upside, well, if I saw McDonald's, I always like buying McDonald's. And it was actually flat for the day. So I don't mind. I'm not afraid to buy McDonald's when it's at 2.3 to 1 on a retest of the 10-day high. Automatic. Nvidia, it was up 0.5%. It has no other swing trades to commend it, but simply the fact that it was one of the strongest members and was setting up really well yesterday and was actually positive for the day is enough to get him on my prep list. Walmart because every fund manager in the world has to own Walmart. Okay, so that's my quick look at the Dow Tactical. So now I'm going to think about the ETF Tactical. Now this is why you must be prepared for tomorrow to be a critical state day. Look at how many symbols are just getting murdered inside of their NDXs. Look how bad Asia less Japan is. Look how bad utilities are. Now, isn't that strange that utilities, which are supposed to be defensive plays, are getting murdered when the rest of the market is just beginning to show weakness? How odd is that? Well, you know why that's good? Because if utilities are at the bottom of multiple look-back periods, and so XLU is at the bottom of its stack, and the reason is the market has been up strong and just starting to roll over, that should tell you that the potential for downside risk is going to trigger some people to leave growth. Hey, I can go buy utilities while they're on sale. So don't let that scare you. Just recognize that that's one of the ways that you can look at it. You might also say that Asia less Japan is one of those that's primed to collapse, but there's a whole lot of weakness up in here. If you're interested in commodities, look at how bad lithium, the components of batteries are. That thing has been horrible on every measured time frame. So there's a lot of opportunities and plenty of upside if things start to get better, and you might just be interested on a auto framer and reward to risk ratio. I might use the auto framer to start setting up. This gives me all the tactical details I need to know, ranked by that mechanical entry for reward to risk ratio in the usual way. I might be interested in the ones that are already favorable on reward to risk, that's highlighted in the dark green, and the ones that also squeezed very tightly. Look how tightly squeezed Microsoft is and has a favorable reward to risk. Microsoft, you have to be ready to trade that tomorrow, along with McDonald's. Those two are the no-brainerest. That's what you do if you don't know what to do tomorrow and the market starts going up. If I was using the TC 2000 bundle, and if I were just looking at the ones that are in my my hybrid swing portfolio, and then if I just ranked them by reward to risk, and I see where the S&P was, I notice the ones that are I might want to concentrate just on the ones that are better than 2-to-1 for the upside. The ones that have the best reward to risk are the ones that sold off the harshest. But I'll tell you right now, I'm interested in Alcoa, which is at 2.7-to-1 and lost 4.4% today. Compound critical state. So now I can start using this to form my tactical trading templates. If I just go to the NDX extract, I now get a chance to really focus in on all the things that have been murdered on the 10-day and 2-day sell-off. This is where the weakness in the market was coming from. What are the things that have not been getting murdered? Well, the ones that are still in really good position on the basis, that should read Oracle, sorry. On the basis of 2 days in. So Oracle is finding strength while the rest of the world is melting. But Home Depot, U.S. Steel, Intel. Notice that harsh sell-off in ExxonMobil created a real surprising moment of opportunity in Chevron. And then notice how that's reflected in the short-term weakness in a sector that's actually been pretty good. So there's an opportunity in energy and Devon Energy tomorrow that's considerable. I can look at my frog list of trading value and simply look at what is the range percentage, compared to the, high average range plus high frog quality numbers, and I can rank things according to this. So the things that are especially well positioned on a relative basis to be good one-day intraday traders: marijuana, Tesla, Intel, clean energy, Devon Energy, NVIDIA. That's what you need to be looking at for tomorrow. And then so on down the list. The ones that I really like are, all other things being equal, large frog quality numbers and large range percentages. Those give you the opportunity for large intraday moves. So that's how I might use my little tactical screen in order to come up with a useful set of tradables for tomorrow. Let me go now quickly, with your permission, to sniper trade, or no, I'm sorry, the quick coaching. So here's Brian. Sorry. And he's looking at the pound Aussie dollar on 5 minutes. Here's where he's taken as the market open. He's framed out, I think, probably a range stat. He saw the OR3. Gets his leg up and gets 1.5 in a matter of an hour. He considered a COTA 2 re-entry. Could have taken it. This is still okay because you're in the summer and fall. But if you take it, you cannot wait any longer because it's about ready to get failing. So if this works, it must work right away like it did, and then using a strict PSAR, because you're talking about the second leg up now. This is why if you use a standard risk box, you keep using the standard risk box here, but you decide to exit it there anyway, so you're really capping your loss at 0.4, and that gives you a chance to get this piece. But there's nothing wrong with the trade not taken. As long as you're getting that one, you're getting it in the sweet spot. Notice how that is all in your favor on the favorable side of a rising red river. That's why you love that trade. The bottom was put in way back over in here. All of this stuff is pretty strong support. There was a hint that it might go higher. You took the shot, it went higher. You banked 1.5. That's a good day at work. Same thing beautifully done on the Kiwi US dollar on the 5 minutes. There's his zero line with a range stat either direction. Gets the breakdown, standard risk, comes in, cashes it, drag and exit, considers taking that, might have. If he does, his risk is to here. He'd probably get out here. So patience is a virtue. When it makes a higher low, you get the COTA 2. I think he stayed too long. I'd like to see you get out on this one or this one. But that's a 0.2 improvement that we could make. And now that we're back into this choppy sideways red river, he's not getting jerked around by that at all. So that's a 2.7 R for the day. And now we just quickly notice he's made 11R on 26 trades, which is an expectancy of about 0.4. Well done. This was Jose. I want to show you how to start thinking about this. First of all, I would say if you're using the black, you're using the black background, so the use of the yellow line makes it easier to see. He's going to ask me, is this a Kata 2? I'm going to ask you, was the previous move so strong that this looks like a buy on dip opportunity? Was that strong? Probably not. Yeah, but maybe. We're north of the Red River. Here's the zero line. So we are still in the spring this whole period. So that's worth taking a shot. I don't disagree with that. If you got out at exactly the right point. But here's some things that I want you to notice. Start looking at the decisions that you're making and bring them down to the Red River to detect when this could not break higher than that. This is the least surprising move, and now you're violating a PSAR. If I can get short here, I'm hoping that this support level here will fail. Or if I wait for this support level to fail, I'm getting a collapsing dragon right here, which is also, right here is where this thing went into the winter. So this entire spring move compressed, and it began the winter right here, which allows you to get this move. Notice how quickly it moves that standard. It took a long time to grind north, but when it fails quick, fast, and in a hurry. So now as I work my way back into the coaching mindset, I might add some things to Jose's chart. And what I might notice is that the very peak of the upward move was here, and the lower boundary of that channel was here. So my channel is this. It takes a breakout above this to begin to be interesting. That's why the failure to break out here and the rollover is very interesting. Failure to break out. I want you to notice that it didn't even get into the Red River in the spring till way back here. And during this entire move back to the zero line, all it did was go from here to here. That's 4.5 hours of sideways quiet channel. So I don't really like this as a Kata 2, except I could argue this was a low, a higher low. I don't mind taking that shot. I don't want this exit, though, to be a -1R. I want that to be a -0.2. So you should have a wide enough stop that this simple loss is statistically just giving you a 0.2. You'll see that again in some of the other foundations courses. But what I want you to notice is that when this failed to follow through, after this test of the summer, it quickly went into the fall and the winter right away. So I can be short right here with this as my risk box, or short here on the violation of the downside of this channel, which means that if I use this as my risk box, I get that move, which is +1.5. Now, I want you to notice that this is the appropriate size of my risk box. Now, if you said that that was -1, If that was the size of my risk box and I got short here, I'm now looking at one point 4R move in my favor. So when these long spring moves don't go anywhere, you must be instantly alert to the opportunity for downsides. Okay, so that's everything I wanted to cover for today. I gave you the sniper trade of the day in the form of looking at the fractal time periods and fractal framing of the S&P, how to use those key support levels and whatnot to give you tactical trades. And then I made a presentation today over at VTI in their systems development course. And what I would say is, look, we were looking at a system that featured how to trade bearish volatile. And what we said was, when you are entering any volatile market, how you get into it matters. So we've actually seen a bullish move. It's had some rollover. It's not quite bearish volatile yet, but it's near the 30-day low. And there could be a sharp awakening of the bears, which could take this, remember, that's a $20 move. And then that enraged move downside, you cannot be surprised by that, because this little sell-off has brought us into a Z-score of -1 in the risk Z, which means it is just on the boundary of becoming a volatile market. If it lost a little bit, if it lost another $4 tomorrow, it would trigger us into a bullish volatile. And that means that when you're in a compound critical state with little dojis, you got to be prepared to get big wins in either direction in short periods of time, recognizing that just then quietly all of a sudden all the volatility evaporates and it goes sideways. That's the least likely. So we have just entered a really important compound critical state inside the S&P. So if you're trading symbols that are strongly correlated to the S&P, you need to know that the S&P is in a compound critical state, so that the S&P might lead you to an even more volatile energy sector, which might lead you to an even more volatile clean energy ETF, Devon Energy, and as we saw, Chevron or ExxonMobil. So now I'm going to be prepared tomorrow to see which way does the market go. Is it going up or is it going down out of this compound critical state? I don't care. I would just like it to move hard. And then if it starts moving up, I'm going to say which are the sectors and which are the symbols that are leading the S&P northward, and I want to concentrate on those if I want to fine-tune my entries and fine-tune my targets. Or maybe I will just be content with trading the S&P or conservatively trading DIA. So this is how I use our tactical daily report plus the results of today's tactical trading in order to establish a reasonable target list for tomorrow. And that's everything I wanted to say for today, and thank you very much for your patience. It turns out that it turns out that me being able to speak about something I love like this to people that I love and respect takes my mind off my breathing. It actually becomes a breathing exercise for me, which is good therapy for my recovery. And you'll notice that I wasn't really coughing and was pretty well modulated on my breathing all the way through. So I was using the sound of my own voice in my own ear almost as a mantra or metronome in order to establish my cadence for breathing. And so when you're doing walking or breathing exercises in my condition, what you're looking for is sustained breathing that allows you to talk, but requires you to use the full capacity of your lungs, but not to the point of where you're straining. So that's part of a good breathing protocol. So I appreciate you giving me the opportunity to do my breathing exercises in public. So take very good care. And I agree with you, Greg. I think this is mindfulness in action. It's motivated by a sense of duty to others, which makes me want to do it. So anytime you're in a position where it hurts less to do the exercise than to not do the exercise, like if I had not taken the opportunity to talk tonight, then I will have felt a missed opportunity to serve others. And then I would also have had to suffer through breathing exercises when my little monkey mind would have said, it would probably have been much easier and kill two birds with one stone to just do the nightly podcast in a relaxed fashion, to talk through these things in an unhurried way, to knock out your breathing exercises while you're doing it. And now, since we're recording this, we have now created an artifact that we can use for leverage for future learnings. I mean, how good is that? That's actually how the spirit animal of the coyote makes little practical hints of advice to the hardworking badger that is engaged with defending the lair. So that was an example of some coyote mind of being very clever and finding how to gain leverage with the things that are in your best interest to do well. So if you can find something that should be done and something that can be done against a standard so you can improve your craftsmanship, and you structure the reward to risk so that it is easier and better to just do it right, that is actually compound leverage towards doing things that in your rational brain you know that you should do, but which enlists the laziness of the monkey mind to persuade him to do the right thing. So that's understand your own motivations in order to help you make it easier to just do the right thing with leverage, and then document it as hey, I did the right thing today, and tonight's podcast for me is a large R multiple. So that's everything I got for tonight, and thanks so much for hanging in there with me and tolerating this. So take good care, and we'll see you tomorrow.